Let's go. Right. So the news. Well, we knew that we were gonna have like a very active week this week with the news events because obviously it's coming down to the end of the year. It is the week before Christmas. A lot of traders will be trying to, I would say, see how much they can do before the actual holidays come around. Because obviously Christmas is for family and all of that, and people will be slacking off a bit when it comes to trading. And so the market makers actually take advantage of that, which is why this week is so packed with news events. Whoever is going to be trying, let me mute my phone, sorry. Whoever is going to be trying to make whatever they can out of the markets this week, they're not going to make it that easy. Let's put it that way. And by the end of the day, though, what we should always remember is that the market still works in cycles. The cycles are still going to be the same. It's just that we're going to be having a more, what I would say, we're going to be seeing more aggressive moves on a week like this. So it's a matter of either you're going to trade before the news, which is most times not a good idea. It depends on how early before the news. You're going to trade the news, but an FOMC and interest rate news, unless you are precise about what you're doing, then it is not advisable either. The best time to trade is after the news. I will show you a setup during this session that you can use. It's called the first bounce trade. I actually implemented that in my trading plan today, as well as there's another thing I wanted to show you, that why I knew why gold was going to be buying more than how it was going to be selling today. The sell was a trap. The sell was the stop hunt. The sell was to trap everybody below a certain level who would have been thinking that that was the move. All right, so let's go. GU would have done basically a similar thing, and obviously the US dollar base pairs would have done the opposite. The code pairs would have gone up, the base pairs gone down. All right, looking at the daily chart. Yesterday, we had this huge push into the highs. So it cleared all of these highs for the last, I would say, 2-3 months. Oh, am I correct? Yeah, about that. Maybe about a month and a half. Sorry, this is not the weekly. Right, so yeah, this push cleared all of these highs here. That's a lot of liquidity to take. But at the same time, gold has been bullish for quite a while now too. So it would be, unless you had seen like a big push down even from yesterday, or yeah, let's use yesterday. Say this push was down instead of up and it closed below these lows, then it would have been more logical to be looking for sells today. But the push that we had did not break any lows. It didn't break the previous day's low. It broke the previous day's high and all the other highs before it. So that was a strong signal that today would have been more of a buy day than a sell day because of where price was going. I'm not sure who is marking on the chart. But yeah. All right. So with this bias in mind, or this idea in mind, because the truth is you can trade either way depending on how you trade on the day. But if you're looking for the bigger move of the day, then obviously having a bias would make more sense. All right, so with this in mind, let me go to the 50-minute chart. Yeah, and how we know price moves too. We know that yes, there would have been a pullback to continue forward. So that was expected. But looking at the 15-minute chart, this is what we saw coming into today. We had all of these pushes into the highs. So we had that pattern, a pullback, and the strong move from the interest rate news, the CPI news yesterday. All right, so with this move, as I was saying from the daily chart, it is logical that we would have seen a pullback of some sorts for price to be continuing. But at the same time, we're not going to be predicting too much, because the truth is, with this ranging of price after the close of day yesterday, coming straight into the New York session, basically, we knew they were setting up for something big. And we know that FOMC is a high impact news event. So having seen the way price was moving coming into New York session and straight into the 2 o'clock news event, we know that when, let me use, what can I use? We know that when we see consolidations like this, there are the two possibilities that exist are this. You're gonna have a sweep of the low and a sweep of the high, so like a whipsaw, and I think that would be the average would be more on the side of the whipsaw than any other pattern. Or you could have just had a straight consolidation and price could have just left and gone about its business. You didn't have to probably sweep one side to sweep the next. But at the same time, my bias being already bullish for today, I'm actually anticipating either a retest of this high or price actually breaking the high of the previous day. We will see how that goes. But when I saw this huge push coming down into the lows here, that was the first sign of the stop point for me. And with that, I usually take my entries on the 1 minute time frame. This is what we call AMD, accumulation, manipulation, distribution. Or it can be markup, accumulation, distribution, and another and the push. So it depends on how you see it. So on the 1 minute time frame, there is a way for you to even judge how, when approaching the day of a high impact news event, there's a way for you to see like what is happening with price to let you know where the initial push for the news will go. If price is, for example, let me contrast to US dollar CHF. So US dollar CHF would have obviously done the opposite of what gold would have done, based on the fact that they're quote and base pairs towards the US dollar, the DXY. So if on the Swiss franc US pair, you're seeing price sticking to the low in terms of the range of this range here, because you have a dealing range to work with, which is here and here. So that's your dealing range coming into today. If we're going to look at the 50%, let's see. So you have what's called discount and premium in terms of price, in terms of the range. So if we mark the 50%, which is right where price kind of coiled it, and let's delete that. Right, so price stayed below the 50% of this range for, well, most of yesterday coming into today, the close of yesterday coming into today. Actually, yeah, that's correct. So using the range, the truth is, as I said, price can whipsaw either up, then down, then or down, then up. Price on US dollar CHF stuck to the lower end of the range. On gold, we would basically say it did the opposite. It stuck to the upper end of the range. But if you're also going to take into account patterns that you can use to anticipate reversals or continuations in price, you would have noticed that, because even though we have a buy here, as I said, it's not a guarantee that it will take the previous day's high. It can actually come back, retest that high, and then fall off again, because there is a gap. Let me use a little bit bigger time frame. Most of the gap was filled. There's liquidity resting here in this area, right here. And obviously there's liquidity in the high here, the new high created. But we're yet to see if this will be the new high of the month. But anyway, let me get back to the AMD. So we saw the first push, which was a trap. Having seen the trap, for me, based on the fact that they used the news event as a catalyst to move price fast in the direction that they wanted to use it to trap us as retail traders, my entry criteria on this would have been the pattern that I'm looking for. So first we saw this huge rejection week after this first 1 minute candle here. After they settled off, I was waiting to see if it was going to be a continuation or a reversal. Even though I had a bias in mind, I still prefer to wait to see what happens, to be reactive and not predictive. And so we had this push down to kind of fill some of the wick that was here. We had another little AMD pattern in here where price fell off, so dumped, accumulated, dumped again, and then we had this push to break this neckline here. So with that, my first structure was broken right there. My entry came right here because I was waiting for the pullback, having seen the first leg of the W, the second leg, the break of structure. This is my entry. I bought right up to the top here. I was thinking it might have taken, I was thinking it would have come all the way up to this high. It didn't. My exit was right below this wick here, right here. I didn't want to see where else it would go after that. I would have been greedy if I sat in it for much longer after that anyway. And this was the entry I took based on obviously anybody could have sold and would have won the trade, and anybody could have bought and won the trade, but it's based on your timing, your setup that you're looking for, and how you enter, your rules for entry. And those were my rules for the entry, working with the bias that I had from yesterday, and waiting for the pattern to show up and getting the entry from there. The first bounce trade that I told you about just before this, that's actually how you can trade the news after the news. I'm going to show you oil yesterday. I don't know if you have any questions so far. If you do, you can let me know. It's fine. Still wait. Just tighten the lines a little bit so I can see. Right. So it was the 13th. Had 8:30 news, I believe. So this was the news candle. This is a very good example of first bounce trade. All right, so I'll be waiting for 8, because you have the equity, the US equity open market at 9:30. but we had news before that, so I wasn't really working with this time yesterday. All right, so we had the news, which was this candle here. We had this coiling of price right here. Once you see this happening before the news, you can expect what is called I don't know why the name is slipping me right now. I'll soon tell you. But this tells you that you're gonna have an explosive move up. This pattern right here. All right, so we had the news, we had the pullback, and we had this break of structure here. So this is what you're basically looking for. You're looking for the break of structure after the whole up and down of price here, an erratic movement. You're looking for a retest to very simple. It's nothing that requires any genius. Simple structural entry, and you wait for the retest, and this is the entry, and that took you to this was actually a very good trade. This went from, if we use here, took our entry there, stop loss here, and say we came out when price broke the low right here. Right. And obviously this is the 1 minute time frame. I believe my stop loss would have been a lot better than this. So it would have been right at the low of that candle. And this is oil. So this was the idea in terms of the first bounce. You don't have to actually trade the volatility of the news. You can wait until the volatile candle has passed and wait for the break of structure, the retest, your entry. Always trade in the direction of the news event when you're taking this first bounce trade, because price tends to continue in that direction. You don't know for how long. It depends. Just like today with the bias on gold, it can go so far and then reverse. So you have to be able to set your targets based on whether you're looking for 3 levels of rise. So let's see how many we got out of this. We got, this was the entry, we got 1, 2, about 3. Yeah. Or you're looking for based on partial, taking partials. Would have taken partials here, along here, and let the rest run to wherever we had exited here. So that's the idea of the first bounce trade. It's actually a very good trade to execute if you're not wanting to trade the news and you're being more on the cautious side when it comes to news events, especially the high impact news events. I don't know if you have any questions. You can unmute yourselves if you do.
I'm good. Please continue.
Was everything I said just now clear?
Yeah, it makes sense, but still a beginner at this, so.
Oh, so if you where would you need some like clarification or anything like that?
Well, I have some basic understanding of the price action, the structure and stuff, but this 3 rises, that's something new that I'm looking at.
All right. When I speak of market cycles, market tends to cycle in threes. So stop hunts come in threes. The levels in terms of the cycle come in threes. When price is gonna so those two main things actually, the cycle, the stop hunts, they come in threes. And what else comes in threes? The 3 push patterns are most times a dead giveaway as to when you're gonna have either reversals, especially reversals, yes, because the stop hunts will tend to create reversals, And yeah, that's it. When you're gonna have a change in trend, you're gonna see like 3 pushes to the high or 3 pushes to the low. They work in threes. And you're in terms of the days for the day count for the cycle, you're gonna have 2.5 to 3 days of a trend. The trend you'll have pullbacks after 2.5 to 3 days, and then continuations or complete reversals. So it's a pattern that you literally have to study in the chart to be
Right.
able to spot it, like just to prime your mind to be able to see it. So let me, if you, from what I just spoke of here, you would have seen from the entry here, we had 1, 2, and this push went all the way up here, 3. And from there, price started to fall again. We had 1, 2. If we use it, the break substructure, we had 1, 2, and let's size this down a bit. But we had 3 peaks. We had 1, 2, 3 peaks, and then prices went off into the close of the day. So you'll tend to see that a lot of that. In terms of the stop hunt,
Nice.
you had 1, 2, 3 pushes into the high, and then price fell off. And just gonna show you that. All right, so we had 1, 2, 3 levels of drop, the retest, and then price left. And it's a very repeatable pattern. You just have to know how to use it, and especially if you're using it within certain time windows in terms of the trading sessions, like Asia, London session, New York session. So Asia session, the timings that I use are between 8 p.m. and 11 p.m. These are based on Stacey Burke's trading concepts. Then London is the same, 2 to 5 a.m. and New York is 8 to 11 a.m. And these are Eastern Standard New York time. And within those windows, you'll find your setups. If you're trading trade setups, a particular trade setup, you'll find that price moves within those time windows. You'll find your setups forming in those time windows. And your setup tends to work out. You have a higher probability of a win trading within those windows of time. And yeah, but I'm gonna actually do a series I've been talking about. I'm gonna do a series going over how to trade this way, how you can use the 12 candle window, which is the same 8 to 3, 8 to 11, 2 to 5, 8 to 11. So 12 candle window on the 15-minute time frame. How you can use that along with the push patterns, along with the round numbers and quarter levels to actually give you very accurate and very powerful trades. So I will be doing a series on that. So you can look out for that. So,
Sure. Thank you. And is this applicable? Is this characteristic noticed on just the Forex, or is this
all instruments, all of them.
all instrument? Okay.
Yeah, whether indices, commodities, all of them.
Got it.
All right. So if that's it, then I'd say just to recap, it was my bias was based on what happened here on the daily, in terms of the. All right, now I have 10 minutes. Okay, this was not it. This was gold. Sorry. Right. So based on the fact that price gave us a strong bullish push here, my bias coming into today was to buy, and based on the pattern that was formed here, I waited for the manipulation to happen first and then looked for my entry. And yeah, it worked out quite well based on that. And yeah, that would be it. So I'm waiting now to see how price behaves if it does come back here for any time for the rest of this week, or if not, we just trade what we see and not what we think we want to see. So as simple as that. All right, thank you very much for coming and for joining. I hope this provided some value, and maybe something that you can go back and study or look back over in your charts and see if you can identify some of the things I spoke about. And of course, as I said, I'll be coming with more content to actually clarify the concepts and to just help you with your trading in general. All right, have a good evening or a great day. Take care.
Thank you.